Tesla stock is down over 0.5% today in after hours. This, for the most part, is due to Adam Jonas' crazy bombshell of a note out today on Tesla stock. I'll give you a bit of a recap on that because Gary Black is also throwing out his opinions on this Adam Jonas note about Tesla stock. We will also talk about the fact that Cathie Wood is buying the dip pretty aggressive right now in Tesla, and your big catalyst coming out tomorrow for your AI sector of our markets. No, it's not the ARM lockup period. That is on March 12th. That is a huge catalyst as well, but you will have Broadcom and Marvell that report earnings tomorrow in after hours. There's something very particular that I have noticed with Broadcom. The last couple of days, AI stocks have done very well. For the most part, yesterday was a bit of a rough day, but yesterday, Broadcom fell a lot more than your other stocks. Today, Broadcom was only green like 0.5%, whereas Nvidia was up almost 4%. You are seeing this underperformance of Broadcom, and that could be an indication of bad earnings to come. If either one of those companies have bad earnings, especially Broadcom, which is the underperformer over the last couple of days, well, that could really sour the mood around AI stocks, thus actually have a huge impact on the broad markets. All of this and much more. In the meantime, before we get rocking and rolling here, hit that like button as well as subscribe to the channel. It's free 99 and it costs you absolutely nothing to do so. But indeed, before we get into the meat and bones of this video, Tesla in France has created a new Model Y, and it's a two-seater, mostly designed to be used for business-related purposes. So it's only two-seaters, so you get a lot of room here in the back to haul things, move things, transport things. Is this a big deal? Probably not, but could it be? Of course. I think time will tell. Tesla will give you 10,000 free supercharging miles when you buy a new Tesla vehicle by March 31st. On March 2nd, it was announced that you would receive 5,000 free supercharging miles, so they essentially doubled this. Which, just for context, this is roughly equivalent to 1 year worth of driving for the average driver. Tesla used to offer free supercharging anyways, so a lot of people will say this is some kind of incentive. Is it really? I guess at least a little bit, but financially it's not going to have much of an impact for Tesla. One of the founders of DeepMind AI, the company, says V12 is going to be over 100x reduction in interventions compared to V11. This is not an incremental upgrade, it's a leap forward. Thanks Ravelair for giving me a chance to experience V12 path and planning control. It's impressively better than V11, and I predict that most FSD users are going to find the new system to be dramatically less burdensome, annoying, and scary to use. The degree to which V12 accurately mimics human driving behaviors is startling, and Tesla's ability to capture the good behaviors without the bad ones is better than I expected for such an early release. Truly impressive. This is so good that I wonder if the AP team might not shift development approach. Up until now, big improvements have required big changes, but the range of behaviors that are being effectively implemented with E2E, path planning and control, suggests to me that they can get the rest of the way to, quote, better than human, solely on top of more and better data and training. Congratulations to Tesla's AP team. Impressive work. Now, he's talking about the end-to-end neural net program where this V12 version has very little code at all. And it's basically all, neural network to neural network, kind of like your brain, right? Think about it like this. This is the way that I always kind of explain this to everyone in like real life, right? When you take in information, it goes through multiple different networks in your brain, essentially. Think about it like this. If you thought someone was going to fight you and, you were going to get into a fight, you're going to be looking at the other individual's body language. You're going to be looking and interpreting their tone of voice, how far away they are from you, what your next decision is going to be. All of that happens quickly. And that's the kind of human brain for you, right? That's kind of what you're trying to solve with FSD. If a car's going a little too fast, come into the four-way, come into the stop sign, that's kind of on you as a human to like, hey, are they going too fast to stop, essentially? When Tesla can figure that out and get that perfect, the same kind of judgment as a human can make, then you are going to be able to start employing your robotaxi network to some of, the most developed or trained areas of FSD V12, like a San Francisco, like maybe a Dallas, Texas, a Miami, Florida, right? Some of these areas that, see FSD being used already a lot on them. Elon Musk responds to this post that I just read and says, "Thanks, that is an accurate assessment. Training compute is currently our limiting factor, but that issue is being resolved fast." Another reason why Tesla stock likely did bad today, and even here in after hours down over 0.5%, Tesla announced that the German power plant that caught fire due to the climate activist, you really can't make this make any sense. Like, why would you try to shut down a Tesla factory? Go boycott Volkswagen or something producing gas vehicles. That would make more sense to me. But apparently this will keep Giga Berlin out of commission. There will be nothing going on at Giga Berlin until March 17th at the earliest. So that is about 11 days. That means overall the plant's going to be shut down almost 2 weeks. Now, Giga Berlin being shut down for, just call it roughly 2 weeks, it's not a big deal in the sense of Tesla sales and deliveries. There's enough inventory. You could shut the factory down for 12, 13, 14 days, and it's not going to make a big deal for delivery numbers. But when you shut down a factory, there's a lot of additional cost that go along with that, and just not running the factory itself can cost you tens of millions of dollars at the bare minimum. So could this be a hit to profitability? Maybe. I guess we'll have to wait and see, but I wouldn't expect it to be anything that's notable. Like, it's not going to cost Tesla to whiff it on earnings. But does this create a little bit of fear? Is this a good reason why market makers and other individuals will push down the stock and take on short positions? Well, yeah, it's a really negative sounding headline. But on a totally separate note, Cathie Wood and her ARK Invest have just bought 80,000 shares of Tesla on Tuesday. Now, Tuesday was yesterday. Today was Wednesday. I can only imagine that Cathie Wood likely bought even more shares of Tesla today. After all, when you look at the low of the day today for Tesla, around $173, and where we ultimately closed around $176.50 or so, somebody came in and started buying a bunch of Tesla stock. It is not so great though, because Tesla stock here in after hours, fell under this longer term ascending level of support. This line that we've been talking about, Tesla went under this by quite a bit at one point today, retraced, closed above this in regular trading, and now today, here in after hours, you're back under this. This could potentially set Tesla stock up for a drop into the 160s. But we will talk about that more later on into this video, because we are going to get a big catalyst coming out tomorrow that could have big implications for the broad markets. Now, Jonas put out a new note for Tesla stock today, and what he said was kind of crazy. He's expecting EPS for Tesla at about 99 cents. Previously, he had 2024 EPS projections at $1.51. Wall Street's average consensus estimate is $3.06 a share in 2024. Gary Black, managing partner of the Future Fund, posted on X early Wednesday that Jonas' projections are consistent with what he heard during a meeting Tuesday with Tesla. Black said Tesla's management, quote, refused to agree that auto gross margins had bottomed at Q3. of 16.3%, and their verbal cues reinforced Jonas's view that auto gross margins could fall further in 2024. To maintain sales momentum in 2023, Tesla aggressively cut prices and offered discounts. This strategy has continued in 2024. As a result, auto gross margins, which peaked at 30% in Q4 2021 amid industry chip shortages, have plunged well below 20%. Gary Black added that Tesla sees 2024 as, quote, an investment year. Chief Executive Elon Musk hinted at much during the fourth quarter earnings call. Musk is focused on ensuring the next generation vehicle, energy storage, full self-driving, and other projects that are executed as well as possible in 2024. Now, I personally think the craziest thing of all that was in that Adam Jonas note was the free cash flow estimates. They are crazy, in my personal opinion. 2023, you had $4.35 billion of free cash flow. Adam Jonas is expecting $86 million of free cash flow. That is wild, okay? That is crazy. And then it's expected to jump back to about 4.7 billion in 2025 and 10.7 billion in 2026. I do, again, just to reiterate what I said in the last video, I do think this really lowers the bar for Tesla in a huge way. And yes, that's why Tesla stock fell today. But with that being said, I mean, coming on next earnings, there's not going to be lofty expectations. Expectations are basically going to be in the floor. This could mean maybe the 4-quarter streak in a row where Tesla stock has dropped about 9% the day after earnings, 4 quarters in a row. Maybe, or may come to pass here soon if expectations are very low and Tesla can at least meet those expectations. Maybe we start getting a little bit better of your earnings results from Tesla. But let's be honest, here in the near term, whether Tesla stock falls to 160, 150, 140, Adam Jonas believes Tesla could fall to as low as $100. I mean, what does that here in the near term is how the markets evolve from here. The worst part about this drop recently with Tesla is Tesla has fallen from 260s down to where we are today in the 170s. At the same time, the markets have been roaring and hitting new highs. If that continues, fine, great. A slight consolidation in the markets, that's all fine. That's all great. But if you were to see some kind of like 5 to 10% correction or 20% crash, Tesla's stock already being at these low prices, one could make the argument is more prepared or priced for, bad news, and maybe a crash wouldn't affect Tesla as much. But I think after the last couple of weeks, we would sit here and say Tesla stock would go substantially lower if we do go into a correction or crash-like event. I think a 5 to 10% correction is really overdue at this point. But the thing that is really keeping the markets elevated, continuing to allow the NASDAQ and the S&P to hit new all-time highs, is your AI trade. Without your AI trade and momentum right now, the markets would not be at all-time highs. The markets would probably be 5 to 10% lower at the bare minimum than where they are right now. A couple different stocks have been the main leaders of this AI trade. It was Google. They've since fallen out of favor a little bit over the past couple of days, a couple of weeks, I guess. They're seen as the loser of the AI trade. Apple's seen as the loser of the AI trade. So is Tesla. So even exclude them. You have Microsoft, you have Amazon, you have Nvidia, SMCI, ARM, Broadcom, Marvel, Intel, Dell. These are stocks that have been helping to push the markets higher, among other names out there, right? Those are just some of the more notable names. Well, 2 of those guys are going to report earnings tomorrow and after hours. You will get Broadcom and Marvell. Now, I've noticed something happening recently. If you look at Broadcom, for an example, Broadcom has been really underperforming compared to your other AI stocks, right? Broadcom today did not do that well, right? Let's go ahead and refresh this, make sure we have the actual percentages here. Broadcom was only up about 0.5% today. Take a look at ARM. ARM, for whatever reason, it's making me update all these charts. ARM was up 2%, and that stock is going to get obliterated next week. in my personal opinion, when that lockup period is over with SoftBank, yeah, ARM's going to plummet. But topic for another video. Now, again, Broadcom, I'm a little more, I guess, worried about for their earnings because of this underperformance, right? Broadcom had a really good last Friday. Stock was up 7.5%. But coming on Monday, March 4th, the stock was up 0.22%. Nvidia was up 3.6% that day. The 5th, which was yesterday, Broadcom was down 4.24%. Nvidia was up almost 1%. Today, you were up 0.5%. Nvidia was up 3%. I mean, even take a look at Intel. Intel of all companies. On the 4th, March 4th, Intel was up 4%. Again, Broadcom was up 0.22%. Yesterday, Intel was down 5.37%. Broadcom was down 4.24%. But today, Intel was up 3%. Broadcom only up 0.5%. There is a very clear underperformance of Broadcom right now. And maybe that does have to do with Broadcom going from, like a $600 stock in 2023, 2022 to where it is today at $1,350. There's been a lot of gains in the stock, and I think that's where you could be set up for a little bit of disappointment. As stocks run up, before earnings, it takes a lot more to, really get those stocks moving after earnings. So Broadcom and Marvell, if they don't have anything that's kind of, knock your socks off, really, really good numbers, if they're just kind of, they beat numbers, things are fine, there's no big guide up, there's no huge spectacular, beat anywhere, then these stocks could fall after earnings. And if they do fall after earnings, it likely pulls down Nvidia, it likely pulls down all of the other stocks that I just mentioned in the AI cohort. And, well, that's going to pull down the S&P and the NASDAQ as well, which could have a negative effect on Tesla. Now, let's assume things are good but not great with Broadcom and Marvell. Probably the most likely outcome at this point. It's going to be very hard for people to be shocked with a Broadcom or Marvell's earnings, right? Marvell's earnings. So odds are the stocks probably fall after earnings. Let's just be honest. Question is, do they fall a little bit or do they fall a lot? Maybe they rally. We've seen crazier things happen before. But even with Nvidia, like I was calling for roughly a 10% fall after earnings. Nvidia fell 10% before earnings, and then it rallied, 10, 15% after earnings. So if you don't see a reset before earnings, you likely get one after earnings, kind of as a consolidation period. But coming next week, you're also going to have the ARM lockup expiration with SoftBank. There's only about 94 million shares that are trading hands today for ARM. There's 929.7 million shares that SoftBank owns. Their ARM position is worth more than the entire company value of SoftBank. That will never end well. Even if SoftBank sold 1% of their ARM position on March 12th, that is next Tuesday, that would be over 9 million shares that would be dumped onto the markets or dumped onto ARM. The average trading volume is around 15 million shares. So if you were to see 9 million shares coming in as sell orders, the stock's going to plummet. I don't really see any way of SoftBank reducing their position in ARM without there being a lot of selling pressure and push the stock lower, just due to the simple fact there's so many shares SoftBank owns relative to the 94 million shares that are currently trading right now. Along with Broadcom and Marvell tomorrow and after hours, you will also get Costco, high-flying retailer there. Definitely one to be watching as well. MongoDB, DocuSign, Samsara, Petrobras, Gap, and Runway. And then Friday pre-market, you have a couple names here, but really nothing notable. So yeah, Tesla's not exactly in the best position to handle a drawdown in the broader markets right now. If Broadcom or Marvell have bad earnings, let alone just okay earnings, and the stocks fall, that's going to put pressure on your AI stocks. I imagine that could bring the S&P down to about the 490 level. That's the level I'm really targeting right now. That's where the 50-day moving average is for the S&P. That would be at $489.49. Call it $490. That would be a decent little correction of about, let's see, about 4%. Could you fall a little bit more than that? Of course. Now, there was some confusion on this. A correction is 5 to 10% of a drawdown. 5% drawdown can be deemed a correction, right? 10% is, I guess, your more technical definition of a correction. And then 20%, really like 15 to 20% is seen more or less as like a crash, right? So if you do go through a correction here, which I think you're overdue for anyways, that could mean more downside for Tesla's stock, unfortunately, but maybe not as much downside as we would have seen otherwise, considering Tesla has already fallen so much. You can also see in the options market today for Tesla, there was 1,017 orders totaling $2.87 billion with a positive order value of 65%. This is from hedge funds and institutions. So hedge funds and institutions, they were indeed, using the options market to essentially buy the dip in Tesla stock today. Now, we don't have much for economic data coming out tomorrow. We are going to get initial jobless claims at 8:30 in the morning, and then the ECB press conference. I'm not expecting this will move the markets. Could it? Of course, but I'm not expecting it will. Fed Jerome Powell will also be testifying again at 10 o'clock in the morning in front of the Senate. There's always a possibility that he drops new information on us, but if he was going to, he was probably going to do that today, and that did not happen. All eyes are ahead for, again, Broadcom and Marvell earnings to really test this AI trade. If those stocks have bad earnings, well, that's going to be very, very bad news for the broad markets. And stocks are going to react to that mainly on Friday, right? You have earnings tomorrow with those names in after hours. And then coming Friday, you're actually going to get the reaction from those stocks and from the broader markets. Of course, tomorrow in after hours, you're also going to get a movement in the S&P and the NASDAQ based on their earnings. But for the most part, it's going to take place on Friday. Friday in the morning, you also get the non-farm payrolls as well as the unemployment rate. So Friday is really shaping up to be a pretty crazy day. And again, tomorrow in after hours. Now, take a listen to some of these comments today from Fed Kashkari after the bell. He says the base case is no more rate hikes. If inflation flares again, that could justify a rate hike. He says if inflation seems more entrenched than we think, the first thing the Fed would do is hold for longer. He also says in December, he had expected 2 rate cuts in 2024, and it's hard to see that I would now expect more rate cuts. He says, I am currently thinking 2 cuts, potentially 1 for 2024. He says, if the economy continues to be healthy, why would we cut rates? And that the U.S. labor market is coming into better balance. That's the first time we have heard a Fed speaker even mention raising rates as a possibility in a long time. We'll see if Fed Jerome Powell tomorrow says anything along those lines. I think that would really come to a shock to the market. So that is going to go ahead and do it for this video. If you guys would like to come trade with us, check out that link down below in the description of this video. I do send out my trades every time I make trades. I post when I buy, when I sell, a logic to why I'm actually making the trade and what my plan ultimately is. Now, options come with a lot of risk unless you use defined risk strategies, and you can lose all of your money if you don't pay attention to the strategies employed or don't understand the options market. But whether you are experienced, whether you're kind of intermediate, you've dabbled a little bit, or whether you have not traded a single option in your life, that is a great place to be. We're also, buying stocks for the long term. Of course, I send out alerts every time I buy shares of Tesla, which has been a little bit more often recently now that the stock is falling, and also crypto when those opportunities do come about as well. Actually, bought Ethereum already up like 68%. That was a great time to buy Ethereum a couple months ago. But nonetheless, you guys enjoy the rest of your day. Follow the X account if you have not already. It is Michael Tyler over there. Thank you for watching, and I will see you in the next one.